Hey, this will be a video chart on ticker symbol GOFF. We will take a look at the daily time frame. Done this one multiple times, and today was finally the day that I've been basically talking about where these can make great plays, and sure enough, this one has made a lot of people a lot of money, assuming they weren't greedy. But today the kind of gas finally ran out of the tank, and I've had obviously a bunch of questions and so forth come in on it. So what I want to do here, mainly the questions were just simply, where are some potential bounce areas? A lot of the bottom feeder, bottom bouncers, whatever you want to call them. This is the type of chart that they like. High risk, but also high reward. If you catch it right and it bounces for you, you can make some good money. But again, you got to be disciplined when you're trying to play bottoms and catch falling knives and all that good stuff. So, point of this video is just simply going to be let's map out some supports and some possible bounce locations where we might see some sort of dead cat bounce. So, first level of support, and I can't. Looks like barely closed right above there. Is this previous high from basically when the stock finally showed up that first day? Here you can see the gigantic volume, and the highest it went that day was 35 cents. And actually, if you go back and watch some of my earlier videos, I talked about how 35 cents was an important resistance level, and when it was broken there as resistance, you can see what followed after that. So 35 cents is still a support, but you can see that barely closed above it at 36, but nonetheless this is still a potential bounce area where the price maybe will start to or continue on following through with the bounce. Another area of support or bounce area, whatever you want to call it, it's going to be right down here. And of course the low at 31.5, that's going to be another area, but we'll just use these other areas for now. So this will be another support level, and this one's just simply taken from, you can see basically 2 days in a row the price bounced right off that 29.5 cents. So 0.295 going to be the next key area of support. And then after that you have another one pretty close, and that's just simply these two areas. You can see back-to-back days, and that level is valued at 27. So maybe to just make things easier, call it a support zone between 27 to 29.5. Because if this area here doesn't hold, then next support isn't until way down here. Looks like below 20, or is that right at 20? It is at 0.204. So 20.5 cents, we'll call it, is the other level of support. I'll make that line extra thick because really that's the only other support level from a data point perspective on the chart. Nothing over here, so that's basically as low as it can go. But these are all the potential bounce points because once again those are just simply support levels. So play it at your own risk. Obviously, if you decide to get on one, set those stop losses and see what happens. But for the time being, this chart looks to be pretty much toast, at least from the upwards trend perspective. These ones have been known to bounce kind of crazily, but at other times, maybe you'll get one little day and then it'll just keep on heading down. But nonetheless, trade it, don't marry it, trade it, don't invest in this thing. Just use those support levels, use the chart, and use your trading rules in terms of stop losses and all that good stuff. So if there are any other questions on the chart, please let me know. If not, I'd encourage you to sign up for our newsletter up there, and when you do that, as you'll see, you'll get a free ebook. And if you enjoyed the video and want to learn more about charting and how to use it in your strategy as a trader and make an investment into your education as a trader, I'd encourage you to click down here. Check out our video course. Got over 8.5 hours of video and teaching. Been getting great third-party reviews, so I'd encourage you to check it out and give it a try. One more time, this was GOFF. Thanks for listening.